Home loan rates are at record lows in Australia at the moment. The Reserve Bank of Australia has held the official cash rate at 0.1% since October of 2020. There are so many competitive fixed rate loans currently on the market that are advertised well below 2%, and borrowers seem keen to lock in these new low rates, with stats from Mortgage Choice showing a 20% increase in fixed rate loans over the past year. But you still need to tread carefully and do your research before deciding to fix your home loan, even at these record low rates. We'll look at 4 factors to watch out for if you're weighing up a switch to a fixed rate home loan. The first thing to consider when taking on a fixed rate loan is any restrictions on additional repayments. Most fixed loans will only allow a certain dollar amount of extra repayments to be made over a particular time period, whether that's each month, each year, or even over the entire loan term. Anything above this threshold and you could cop a barrage of fees and charges. This is important to consider as making additional repayments can significantly reduce your home loan term and save you thousands of dollars in interest. With fixed loans, this becomes a lot more difficult. One way around this could be to split your home loan, one part fixed and the other on a variable rate, where you can continue to make extra repayments as you wish. The second thing to consider when fixing your home loan is break costs or exit fees. Even when you think you've seen everything, life can be unpredictable and full of surprises, no matter how much planning and preparation you put in. So if you suddenly need to break your fixed rate home loan term and end things early, perhaps to sell your property and move interstate as an example, you need to be aware of what fees and charges you will face. These costs can often be thousands of dollars, so be sure to read through your paperwork carefully before committing to any fixed rate home loan, particularly if it's for an extended term. Hey, thanks for watching so far. If you're finding this helpful or at least semi-entertaining, please feel free to slap your paw on that like button or subscribe to our channel. Another thing to think about is offset and redraw options. In most cases, fixed loans do not come with the flexibility of an offset account or redraw facility. An offset account is a normal transaction account linked to your home loan that you can use for day-to-day expenses. But the balance of this account is also offset against the total amount owed on your home loan, effectively reducing the interest you pay. For example, if you had a $400,000 home loan with 50 grand in an offset account, you could still access this 50K with a regular debit card, but in the meantime, you'll only be charged interest on $350,000 of your home loan. A redraw facility allows you access to any additional funds you have paid into your home loan, but they are usually less flexible than offset accounts. Some lenders charge redraw fees or have minimum or maximum redraw amounts, for example. Some people love the flexibility of having an offset account or redraw access, so have a think about what suits you best before committing to a fixed rate home loan that may not have these features. The final point to consider is your ability to refinance or switch lenders. Once you're locked into a fixed rate home loan term, it becomes much more difficult and costly to refinance or change lenders during this period. If you have any future plans to adjust your loan or move to another lender in the shorter term, it might just be better to stick with a variable loan to avoid unnecessary fees. Once again, this all comes back to doing your research to ensure you're happy with your current lender and the loan terms before signing on. So in all, while fixed loans offer very competitive rates and are becoming increasingly popular at the moment, they often lack the features and flexibility of many variable loans. They can also be costly if you break the terms and conditions of your home loan. Before committing to a fixed rate home loan, consider any limitations on additional repayments, look at break costs and exit fees, weigh up your needs for an offset account or redraw facility, and consider if you may need to refinance or switch lenders in the short term. Thanks for tuning in. Let us know your thoughts on fixed rate home loans in the comments below, and leave a like and subscribe if you got something out of this, even if you just enjoyed watching Dollar Dog do her thing. Until next time.